Hey everyone, welcome back to Corporate Decoder, the place where we unravel the secrets hidden within those massive corporate filings. Today, we're diving into Vital Energy's latest report, and let's just say there is some spicy legal drama brewing alongside the financials. So, Vital Energy is in the process of being acquired by Crescent Energy Company. It is a big deal, an all-equity transaction, meaning Vital's shareholders will get Crescent stock in exchange for their Vital shares. But, as with many big mergers, lawsuits are popping up, and Vital is here to tell us about some new disclosures to address these concerns without admitting they did anything wrong. Alright, let's get straight to the heart of it. Vital Energy is facing a couple of lawsuits from shareholders. These folks are saying that Vital and its directors allegedly failed to disclose some important information in the documents they sent out about this merger. They're claiming that Vital and its directors broke the law by keeping quiet about key details, and also by misrepresenting other information. These lawsuits are asking a court to stop the merger from happening, and are also seeking damages, which is basically asking for money. It is also worth noting that Vital has received demand letters from other shareholders alleging similar issues. The company is saying these lawsuits are baseless, and that they did not need to disclose any additional information. However, to avoid the cost and hassle of a long legal fight, Vital has decided to voluntarily add some information to their original filing. This is not an admission of guilt in any way. Now, Vital is issuing a supplement to their original proxy statement. Think of this like an addendum to a contract where they're adding extra details to clarify certain points. They've highlighted new wording in bold and underlined. For example, when discussing the background of the merger negotiations, they're adding details about confidentiality agreements. This specific addition tells us that Vital entered into an agreement with Company A on the 1st of March 2025. This agreement included a standstill restriction, which means Company agreed not to buy more Vital stock or try to take over Vital for a certain period. Crucially, this agreement did not include a don't ask, don't waive provision. This might sound like a small detail, but in the world of mergers and acquisitions, it is important. It essentially means that while Company A agreed not to make unsolicited offers, they could potentially still ask for permission to make an offer or for Vital to waive certain standstill terms. The standstill also had a clause that would end it if Vital agreed to combine with another company. They're also adding similar details about agreements with other companies, like Company F on the 17th of June 2025. Again, this agreement had a standstill clause without a don't ask, don't waive provision. And also on that same day, Vital signed a confidentiality agreement with Crescent Energy Company, the very company that is planning to acquire Vital. This also had the usual standstill terms. Now, let's shift gears and look at the financial analysis section. This is where Vital's financial advisor, Houlihan Lokey, evaluated the company and its proposed merger. They did a selected companies analysis, comparing Vital to similar publicly traded companies. Here, you can see a list of companies like Cord Energy Corporation, with an enterprise value of nearly $7 billion. And here is Crescent Energy Company itself, Vital's soon-to-be parent, valued at about $6 billion. These enterprise values are essentially the total worth of these companies, considering both their stock price and their debt. Next up is the selected transactions analysis. This looks at past deals, specifically exploration and production company mergers in the Permian Basin, which is a key oil and gas producing region. They analyze these deals based on their transaction value as a multiple of estimated adjusted EBITDAX. EBITDAX is a measure of a company's operating performance, and the multiple shows how much buyers were willing to pay for each dollar of that operating performance. One notable transaction here is Diamondback Energy, buying Endeavor Energy Resources LP for a massive $26 billion. This gives us a sense of the multiples being paid for significant assets in the Permian Basin. They then do a similar analysis for Crescent Energy Company, looking at precedent transactions in different basins like Eagle Ford and the Rockies, providing another layer of context for how Crescent's business is valued. Now, let's talk about the future. At least according to Vital's management, they've provided projections for Vital's performance. For example, they project an adjusted EBITDAX of over $1.3 billion in 2025. Adjusted EBITDAX is a key metric that essentially shows a company's profitability before interest, taxes, depreciation, amortization, and exploration expenses. It is a good way to compare operational performance. And they forecast unlevered free cash flow of about $451 million in 2025. Unlevered free cash flow, or UFROC, represents the cash a company generates from its operations that is available to all its investors, both debt and equity holders, before any debt payments. They've also provided projections for Crescent Energy Company. For Crescent, they project an adjusted EBITDAX of over $1.9 billion in 2025, and an unlevered free cash flow of around $151 million for the same year. It is interesting to see the difference in projected free cash flow between the two companies. Moving on to miscellaneous details, specifically about the financial advisors. Vital has agreed to cover the expenses of their financial advisor, Houlihan Lokey, and also to protect them from any potential legal liabilities related to this engagement. And then there is JP Morgan, another financial advisor. They are set to receive a cool $15 million, but only if the merger actually goes through. Vital also mentions they might pay JP Morgan an additional discretionary fee based on performance. This discretionary part is quite interesting. It means Vital's management gets to decide if they feel JP Morgan did a particularly good job and if they deserve extra compensation. The report also details past dealings JP Morgan has had with Crescent and the KKR Group, and how much they've been paid for services unrelated to this merger. So, what is the takeaway here? Vital Energy is in the final stages of being acquired, but not without some shareholder unrest and legal challenges. The company is trying to address these concerns by adding more information to their filings, while also strongly asserting their position that they've acted appropriately. The financial projections paint a picture of both companies as significant players with substantial projected earnings and cash flow. However, the addition of discretionary fees for advisors and the ongoing legal battles are definitely points to watch. It seems like even in seemingly straightforward mergers, there is always a complex web of legal and financial maneuvering happening behind the scenes. Alright, that is our breakdown of Vital Energy's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think the added disclosures will satisfy the shareholders, or is this just the beginning of more legal challenges? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate financial documents like this. Don't forget to check out our Discord community linked in the description below for more discussions and insights. Thanks for watching, and we'll see you in the next video.